The broadcast is now starting. All attendees are in listen-only mode.
Let's have a great week, Warriors. How's everyone doing? Hello, Kevin, Ziggy, Wayne, all you Warriors. How's everyone doing? Everyone doing okay? All right. I don't know if Blake is here yet. He wants to open it up. Let me see. My view hasn't changed. I said looking for a continuation. Blake is here. Continuation move in Euro. If you watch Blake's look at the week ahead, he's not convinced about the dollar. I still think there's the potential to head down towards 104. We have a great analyst with us today, Howard Friend. Howard got a hold of me about 2 months ago, when the euro was bottoming, said the dollar has peaked for the year. So he's in Blake's camp long term. We'll see if he thinks there's a correction due. I still think there's a possibility we take out the 110 handle before the dollar's a short again and the euro's a buy again. Blake mentioned Kiwi being a decent risk reward up here against the 73.20 level. So I'm still in the camp that the dollar has at least a move towards a 99 level. Here's 98.5. This was a previous low. So I still think there's more left to the upside in the dollar. At least one more wave, A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z. That's my knowledge of Elliott and harmonics, the alphabet. So how you doing today, Blake? How are you? Steve Volge, how are you? Stelios, how are you?
Good morning, Dale.
Hey, Dale. How you
doing? Okay, guys.
Good morning, Stelio.
Good morning.
Hello, team. So I watched your video, Blake, and I'm looking at some of the things. I'm wondering if the action we're getting this morning is still in line with what you were saying yesterday over the weekend.
Yeah, I mean, nothing in my opinion's changed. I mean, I'm still a little hesitant about, continued dollar strength. But I think it's going to be really choppy the next couple of days. There's not a lot of data that's going to be, market moving. So, I mean, am I expecting a big, shift in the markets over the course of the next couple of days? No. And I think, the euro will probably be bouncing around here. I have to admit, the euro is still holding up really well. I mean, we're basically flat for the day. I mean, the euro's down a little bit, but we're still holding above the 38% retracement. There hasn't been much of a pullback at all, and the cable still is pretty firm. I've been surprised, and I think most people probably are, at the Kiwi strength overnight. I mean, we were rallying towards 73 cents. I actually had to short it last night at 72.95, and I closed it out for like 15 pips because I didn't want to stick around all night and stay up all night. But I mean, it's come off quite nicely. But
your line in the sand on that's about 320, if my memory serves me.
Yeah, that's about right.
Okay.
Yeah, that's about right. And I mean, we're only going to break above there, later on this week for the RBNZ. If the RBNZ is pretty hawkish, but I think it. I can take the charts here in a second.
Okay. So is the DSI on euro, has it corrected from extreme levels much?
Let me see here. To go back to
one little pullback. So I'm wondering.
No, not really.
So there's still plenty of longs left in the euro here. Plenty of bullishness left.
Yeah, sentiment is still pretty bullish. I mean, it's still. Let me take a look here.
Nowhere near extreme levels. It's around 70, Blake.
Yeah, I mean that's right. I mean, looking at the euro, it's at 70, so it's not. Yeah, it's not bullish extreme. That's exactly what Steve's saying. So I have to just take a look and know that the 38% retracement is still holding. I mean, which is right here, And so as long as that continues to hold, I can't be bearish the euro at this point. Now that doesn't mean that we won't break and we won't go higher, but I'm not trading the euro at the moment. I have no exposure.
It looks to me like Canada might be putting in a higher low here, which, you know, I would love to see a Canada rally for a shorting opportunity. So
you mean the dollar Canadian rally?
Yeah, maybe back towards 3.5 or so.
You know, it's possible. There was some comments from you know, our trade secretary Wilbur Ross just a little while ago, and actually here you can read it right here. Ross says,
Wilbur. Do you remember Mr. Ed? Wilbur.
I do remember it, Mr. Ed. Yes, that's an old '70s show for sure.
Mr. Ed.
Ross's new NAFTA may help strengthen Canadian and Mexico currencies, and so, you know, the dollar Canadian actually strengthened, or the Canadian currency strengthened on that. The dollar Canadian came off a little bit, and actually I have written on my notes that over the weekend that, you know, the dollar Canadian is a potential short, not necessarily right now, and I'm not short at the moment, but you know, I can't help but to look at, you know, the way we closed.
Yeah, you showed that on the week. Look at it the week ahead.
Yeah, and so as long as we stay below this 200-day moving average right here, I can't be bullish. That doesn't mean I'm going to short it right at this moment, though. I'm looking for a better time. I was actually kind of hoping for a rally up towards 133 to get short, but, you know, the dollar Canadian got smacked down because of those Ross comments, you know, just a little while ago.
There is
So
a chance, Blake, that you might see it now, because if you go back to the 4-hour chart that you were looking before, just my
How you
50.
doing today, Steve?
I'm good, mate. I have some exams to do within the week, but I feel okay. From what we see here, I mean, if you see it in the short term, of course it's too early to say, but to me, as I was saying when we were at the previous consolidation higher around 135, for the time being I see nothing bullish here. So the two most prevalent scenarios I see in this is that it's either some kind of a short-term triangle being built here, or perhaps we're going to see some ABC, which means that if currently we saw the end of, you know, the B wave, we might see another, you know, another high near 133.50, perhaps 134. But I mean, I'm sure that from experience you will agree, there is nothing impulsive in this price action here. I mean, nothing that says we bottomed out here. Correct, Blake?
yeah, I mean, it doesn't look like it to me. I mean, this is just a consolidation. That's all it is. And there's been no, you know, spike type of moves that I see that would qualify as like impulsive. So no.
Yeah. So, you know, I think the prevalent scenario remains a resumption lower, either from here or, you know, from a rebound. But we might get that little rebound. Why not?
Yeah.
Yeah, we'll see. I mean, I'm not really excited, frankly, about anything this week. I'm not. I mean, the Aussie New Zealand took a nice little dip. I actually bought some more back in the 50s. I'm like, oh look, we're down at the 618. So I picked some up last night when we were down here, and it didn't you know, rally as I had anticipated because the Kiwi strengthened so aggressively overnight, which I was very surprised at. That's why I was surprised I got this price down here. So I picked up some Aussie New Zealand back to my full-size position, but I took that opportunity of it when it dipped down to the 618 to take advantage of it. And really the only thing that's on my radar right now is the Kiwi going into the RBNZ this week. You know, the dollar is not very attractive to me at the moment. You know, the dollar yen is strengthening. It is strengthening, but I'm, you know, wondering how much upside we have in the dollar yen. We're capped at the 127% extension. We might get back up to 112, which is, you know, entirely possible, especially with the stock market, you know, recovering the way it's recovered, and gold also continues to look weak. And gold is getting really close to the you know, 1245 level that we talked about last week. Looking at this this upsloping trend line, 618 retracement, we're getting there. And so once I feel that the dollar yen has peaked, the gold market, it's probably worth taking a shot. Sorry guys, I'm yawning a lot because I got up early this morning and I unfortunately went to bed a little late. And speaking of gold, it's actually hitting lows on the session right now. You can see we're hitting new lows on the session. So gold continues to look weak there. Yeah, and I don't have I'm you know, I'm still in some of these cross rates. Like I'm still long the pound New Zealand. I'm still, you know, sitting this one. I don't have any problem with this, you know, at this point. You know, it's come down. This might be a nice little inverted head and shoulder pattern. You can see like this shoulder, head, shoulder. And then, you know, obviously the neckline is pretty apparent, you know, around 178. Still playing this to the long side. I'm not, like I said, I'm not too terribly worried about it. Pound Aussie, also, you know, I'm still long, you know, just it's trying to build a base here at the 50% retracement. So, but the pound's come off because the dollar has strengthened this morning. But yeah, I don't, you know, I'm probably going to be fading some extremes, you know, here in the next couple of days. So if the dollar looks like it intraday, which, you know, might be at this moment, it's getting a little extreme as far as intraday overbought. The hourly isn't yet, but you know, we get up towards this resistance or maybe even a break into new highs. You know, I might fade that. I don't think I don't think that you want to. This is not the type of market, and summer times definitely aren't the times to be chasing the market. You actually are probably better off fading breakouts because things tend not to break out, especially if there's no reason for it to break out at this time of the year. So if something looks like it's going to break out, it's probably not. And so I tend to get on the other side of those types of moves, especially in the summertime, because there's just less liquidity right now. If that makes any sense to you guys.
Sure. Summertime and the living is easy. Like that, man?
Something just like that, just like that. You know, I was trying to think, what else have we got going on? You know, like today, we have no data, none. And you know, we just had Dudley. He spoke. He moved the dollar a little bit, and that might wear off in the market here in a little while. A little bit later on, Evan speaks, and you know, frankly, is like I said, even in the video, and this is probably not a bad week to be off. It's probably not a bad week to be on vacation if you got vacation time or you can get away. Unfortunately, I can't. But
So
if
see
you
you next
can,
Monday, everybody. I'm kidding.
Yeah, might make sense. Oh, hey, the dollar Canadian's getting a little bit of a rally here.
Yeah, it's going to rally to that area. It's going to be a nice short up there, buddy.
Yeah, I mean, you know, if it can rally up to 133, I don't think it'd be a bad place to be on the short side. And this is the type of trade that I'd like to see. It's like I'd actually like to see that rally a little bit more to get short.
Yeah.
So Steve, Nick, if you're correct, and we get some sort of you know, triangle here, might look something like that, perhaps. What were you saying, Dale?
I saw like a recent look from Nick on the yen. I mean, I think it takes it to 118 or something like that.
Yeah, she's looking for a lot higher levels in the dollar, and I just don't see it, which, you know, is fine. I mean, you know, it's okay if she, you know, she sees something that I don't see, and that a lot of traders do that. I don't know if the dollar's got that much gusto in it. So we'll see.
A rejection below 133 will of course confirm the triangle scenario. So that's the key. If we see a rejection below 133, then it's definitely a triangle, and a rejection below 133 then probably gives us a good risk reward against the previous high within the triangle.
Yeah, I mean that's probably a good, you know, scenario if we get some sort of failure below 133, right around this trend line, somewhere in this neighborhood. So yeah, and I'm hoping that we get that. Hey, Stel.
So, hi guys. So I just want to say one more thing. We have to remember that this move in dollar CAD has happened while oil has dropped like $10. So when oil bounces, which it will, I mean, you know, nobody knows when it will bounce, but at some point it's going to come back. That should give CAD a boost, and I mean dollar CAD to go lower. So,
right. Yeah. I mean, at what point is crude oil a value proposition? And I don't know what that is. I mean, I look at, if you look at the Canadian, or sorry, if you look at crude right now, crude broke some pretty key support here. You see this little trend line? You know,
38 to 35 is monthly support.
Yeah, I mean, I could see crude dropping towards 40, maybe to 38, $39. So I don't know if we're gonna. The only way we're gonna get there, in my opinion, is we have to break below this support here around.
Blake, can I risk a prediction? No matter what happens with oil, I expect some kind of a bounce from 40 to 50. You even have an intermittent trend line around there. You know, I have some serious levels of support. If you extend it all the way back to the chart, you're going to see how many times 42.80 roughly that level has been support and resistance in price. So I think that after seeing these plans from 51.70, 52, I think that we will at least see some kind of a rebound from, you know, I mean, I don't believe we're going to go below 42.50 before seeing a rebound, regardless of if it will then move lower again.
So, you know, perhaps here in a minute you can show the traders what you're looking at, because I agree with you. I mean, we've dropped from $51 to 44 pretty quickly. You know, we're getting to a point where, you know, the daily RSI, it already dipped into oversold territory. We might dip back into it again if we get a little bit lower levels, but I mean, we're getting to a place where it's probably going to start looking attractive for a bounce, I would assume. So that, you know, I would agree with you that we're going to get a bounce somewhere soon, but I don't know. I mean, you know, crude's been pretty weak, and I think bulls are pretty frustrated at this point. And you know, if the stock market does see a little bit of downside pressure, does crude follow suit? I can't imagine that crude's going to be going higher if stocks move lower.
My question is the following, and I know that a lot of people are watching it, and I know we've had a lot of discussions about the pound and, you know, the difference that the vote in the MPC did last week, etc. But if you pull up a cable chart today, and I know it's very early in the day, but we have the fourth consecutive rejection from 128, and I think that that's a little bit worrying.
Well, I mean, we should let Stelios talk about this. He's got a blog
yes,
that he's going to be posting.
Yeah.
Yeah, very, very great blog on the pound and the UK. And this week starts negotiations. Is that correct, Stelios?
Yes, yeah. They've already started today, basically. It's going to be, you know.
Besides that, Stelios is the nicest guy at ForexAnalytix. In my opinion.
I would disagree with that. But yeah, the UK is going. I mean, it's the whole process has started today. Obviously, the situation, the political situation, not having you know, a firm government yet, and all that is not a good. It's not a good situation. There's going to be probably delays, but there's a lot of. I've been looking at sterling for ages now, and I am going to put out a blog very soon in the next couple of days, a blog post, and there's a lot of positives and a lot of negatives on sterling, and it's really difficult to say with a firm view, yeah, sterling's going higher, sterling's going lower. I thought that the MPC split was a bigger deal than the markets made it. The markets kind of, sterling rallied for a little bit, then it came right back down. I think it shows that the MPC, they have a reduced tolerance for high inflation. And although they've said that transitory inflation will be tolerated, I think as time goes by, they're going to be less and less tolerant. So, when it hits 3%, which it probably will next month, I suspect that we're going to see slowly more and more members going the way of the hike. And although Forbes was leaving, who was the biggest hawk, is leaving after this meeting, and I think her replacement was announced today. I can't remember the name.
It's another woman, isn't it?
Is it another woman? I can't remember. I have to read up on that. I saw the name and I have no idea. I didn't know who she was, so I have to research that a little bit. But I personally think that the tide has changed. So it's although there's a lot of uncertainty regarding the UK, there's also I think a bigger chance than the markets are implying that rates might start moving. Again, people are talking, whenever I talk about rates moving higher in the UK, everybody talks about the wage growth compared to inflation and how incomes are being squeezed because inflation is hitting nearly 3%, but wage growth is around 2%. And that's a fair point. I'm sure that the Bank of England, the MPC members weigh everything. And if you look at the whole situation of the UK in terms of economic activity, it's still doing all right. Granted, we're going to see effects from Brexit and all that, but at the moment, it's something that, in my opinion, at least the preemptive cut after the referendum was not needed. So, it's something that could easily be reversed. But as I said, there's a lot of things to consider, and I'm gonna post this blog post very soon, where I outline what I think are the main positives and negatives on the UK.
That's good because there are a lot. It isn't an easy sell for longs or shorts. I mean, for bulls or bears. I mean, there's a lot of pluses and minuses, and I think you outline them quite nicely in the blog. So we're all looking forward to reading that, and that'll be exciting to do. Guys, I'm gonna be cutting out. I gotta be around for the open. Steve, I'm gonna pass you the charts. All right? All right, guys. Well, you guys have a great trading session, and I will catch you tomorrow. And have a great day.
You too.
Thank you, Blake.
Thanks, guys.
Okay, Stevie.
Well, okay. Let's start by having a look at cable since we talked about it. Okay, this is what I'm seeing here. We've had this zone marked, and I see the multiple rejections up here, and I don't know. I wouldn't be long here for no reason, honestly. On the other hand, being short, I'm not, but the risk reward I think is very clearly defined. But there is no reason for somebody to try to get involved with pound against the dollar, which
your volume softened, Steve. It was real loud at the beginning and then faded.
Oh, okay. Yeah, I don't know. It's it's sometimes the software for some reason which I haven't realized what the reason is.
There you go.
Yeah, it auto adjusts. The volume.
Oh, okay.
I have no idea why. Anyhow, what I was saying is that I don't know why somebody would want to be long the pound against the dollar, seeing what I'm seeing here in the chart. But on the other hand, if you want to be involved with the pound, there are a lot of good propositions. For example, pound yen. Pound yen has already penetrated through the descending channel, and I think that the close, we're currently fighting with 142. So I think that the close above 142 is probably going to constitute, a bullish break, and this is a pair you can try to be on the long side. On the other hand, as we've said, and Blake is already involved, I'm already involved on with the Kiwi. We have the pound Aussie and the pound Kiwi, both of which have reached some major levels and are making an attempt to rebound. Of course, that's not straightforward either, and that's not guaranteed because they might be in a consolidation, but they have well-defined risk rewards. And with the macroeconomic change we had after the MBC decision, I think that finding a couple of pairs that you like to be long pound is not a bad idea. Pound CAD as well, it has penetrated below this zone, but it's holding the 200 EMA, and it has reached equality target on on the first leg and the second leg. Although, to be honest, this looks more like a bearish consolidation, but there are a lot of things you can monitor having to do with pound. As Blake said, things this week are not very straightforward because what the situation is currently is that we got a more hawkish Fed than we expected. We got an initial reaction from dollar which was bullish, but we have yet to see any strong follow-through. So the situation is the following. We currently do not have the risk reward to be short the DXY. Yeah, of course, if somebody wants to be in the very short term, they can say, okay, I'm going to go short the DXY here and let's say put a stop loss above 97.80, which is, this previous high. But, as I've said, if you revert back to the line chart, you can see here clearly an inverted head and shoulders because this ignores the CPI spike. So to me, the situation with the DXY is mixed. I see the case for a rebound, but there is no confirmation yet. So can you be, right ahead being long the dollar? Yes, you can, because you have a tight risk reward. That doesn't mean that it's a high probability trade, but the risk reward is there. Can you be short the dollar? On the other hand, no, because you have no risk reward. So it is a week that we more or less expect for the market to provide more clarity. So it's one of those weeks. I mean, we have very often been in this webinar adamant about our position in what we think a market is doing, or plenty of markets are doing. But there is also the time that you have to be nimble and say that, listen, I need to be a little bit patient. I need to let the market provide more clarity. So instead of taking shots in the dark, making more smart decisions. If you want clarity, I've mentioned this pair plenty of times. This is the USD ruble, and you can see what has happened today as well. A huge bullish engulfing. We didn't draw this. We drew this line a long time ago, actually, and as you see, it's been following right nicely. I see a really nice breakout opportunity here. We've revisited that when we actually broke out of here. Then we created another wedge. Then we said that there is again a very good risk reward here. Now we're breaking out again, and this looks like something serious is being built here. USD ZAR as well.
That's a beautiful looking chart. If I didn't know it was the ruble, I'd do it. The ruble pretty violent. It doesn't look that violent.
Yeah, if you zoom out, actually, it looks very well behaved, right, Dale?
Yeah.
Very well behaved. Very well behaved. Actually, I'll tell you a little story since the market are slow. The fund with which I'm involved, the guy there loves to trade exotic.
So Putin up there, everyone was laughing at Putin, but down here, Putin looks like he's in control, but things may be shifting.
Yeah, I mean, the guy there loved to trade on his own volition exotic currencies, and ruble was one of his favorite by far. So he was short the ruble up here at this spike.
Wow.
Keep in mind that especially on the spikes, the banks were paying us some insane returns carry. It was an amazing carry trade. At some point, I think we got a 3-month contract that paid out close to 10% return within 3 months when volatility was, extreme, was at its very extremes. And at some point, he resorted it here, and when we spiked up above 85, that particular trade was 3 million out of the money, 3 million. And he had to reduce positions in other trades to actually stick with it, because he was a strong believer, and because he has a macro background, etc. And actually, he was sweating bullets, as you understand, not to mention other expressions. Because he didn't want to get margin called, so he had to liquidate some bonds, etc. But that trade actually ended up paying more than 3.5 million in profits afterwards. Just a little story. Of course, I'm not going to say a name.
Love to hear stories like, okay, what's his phone number?
Wait, let me fax it to you.
All right, buddy.
Okay, yeah, but this is a very interesting trade at the moment. Also, we've mentioned that again last week. Great risk reward, very dangerous at the moment, because the signs of a reversal are weak for the time being, is USD MXN. This looks very appealing, but for my taste, it still hasn't provided any real reversal signal. So I would love to see here like a very strong Marubozu candle or whatever, something that will take us with force up to 1815 again, for example. But it's one of the tickers that I'm monitoring as a reversal candidate. Now, as I said, this is a reversal candidate. That doesn't mean that it's going to reverse. USD ruble was also a reversal candidate for me. It did reverse. This one might not. Now, having to do with crude that we mentioned before with Blake.
That's a good point, because there were plenty of Republican reversal candidates that were competing against Trump that ended up not manifesting.
That's very true, actually.
So just because you're a candidate doesn't mean you're going to be elected or nominated. Yes. So, very good point, Steve. And, Steve, after you wrap this up, I've noticed S&Ps are about to make new contract highs. I'm guessing,
and I wanted actually to show
Friday,
the
NASDAQ might have that ABC that we talked about last week.
Yes, and look at this. Look at the place that we get a rebound from the NASDAQ. I mean, I haven't touched this channel since many weeks ago. And you see, we penetrated through this channel a couple of days, but we pulled back to close above it every single time. And this Monday that we actually opened just on top of it, we're seeing a very strong rebound. So I have to tell you that
I may want that red candle clean out some stops over, not the top red candle, but after the first bounce, maybe get up there. That would be like a little ABC before continuation.
Listen,
you know what I'm saying? What I'm pointing to?
It might be, first of all, we might have multiple types of, like A, B, C, or we might see a triangle, like, for example, A, B, C stalling below the peak that we had here at 5,775. So, there are multiple scenarios that can play out here. But
you really do have to say that this does speak volumes, because this is the first time in recent memory that the S&Ps are making new highs without NASDAQ leading it.
True. That is very true. And
perhaps, so, I mean, it was leadership and outperforming all the way up. To me, this is some kind of market tell.
I totally agree with you. How is the English expression? We've started to see some cracks in the armor.
Yeah,
of the markets.
that's a good one.
Perhaps.
Yeah.
Yes.
And battleships take a little time to turn around. So
More than a little time,
yeah,
actually.
yeah.
That's why actually we abandoned the whole idea of battleships, in modern warfare.
Oh, okay. So that was a destroyer that the U.S. lost some servicemen that collided into a tank, some kind of container ship. That was a destroyer, not a battleship. There's a difference.
Battleships were huge, huge ships with insane firepower. They were like floating castles. They were built to sustain a lot of damage, because it was inevitable that when you have such a big ship that you would not be avoiding incoming fire. So they were like floating fortresses. But then then as modern warfare and weaponry evolved, they realized that you need, more nimble type of fighting and more, faster ships that can actually avoid, direct confrontation.
Right. Someone's asking you, Ash is asking you about silver. And Luca, I agree with you. 3 hikes and a stumble doesn't happen. It hasn't happened. So I have a question for you, Luca. If Nick is right about the yen, and I know you were looking at the bunds for a potential important high, where's your head at on interest rate instruments, the U.S. 10-year and the bund, with the fact that the yen may be making an important turn? Because if Nick is right, the bond market rally should be close to over. So that correlation is what I'm talking about. So I'm interested where your head's at on the bunds now.
Since you're talking about it, this is a formation people should monitor at the bonds, right? This is an ascending wedge.
Yeah.
I remember, I think, Grega seeing this as an ABC, for example.
Yeah, this whole thing could be a 4 and we get a 5.
Yes, I also have an alternative scenario for that, without having done, very close wave count here, because, I use Elliott wave as an extra tool to my analysis, and that not as the main tool as Grega does, which, he's the absolute expert on that. But let me revert back to the line chart, and let me ask you the following thing. Why do we necessarily want to view this as the low and not this one? A, B, C. You see?
Good point, yeah.
Because intraday...
Otherwise, that would have been an irregular A, B, C.
You're right. But we can view it like this as well. At the closing basis, the low actually was in March. You see it's very clearly defined. And if you take this assumption, then we have a clear A, B, look at B, A, B, C, correct?
Mm-hmm.
And then we have a move higher. Does this look impulsive to you? No, it's overlapping. No. Do you see it?
Yeah. And this is part of Grega's scenario, the yield against the euro. So the euro's rolling over at the same time the bonds might be completing a bear market rally. So I think those are a couple of key elements to be paying attention to in the coming days and weeks. So correct. This is how you could get a rally in the dollars if the bond rally's over.
And since we mentioned it, we even see here even a slight RSI divergence. Let me fix this. There it is. We even see a slight RSI divergence here in this high, right? Yeah. In this last high. And this was the 38.2 of the whole move lower that actually rejected us.
Nice.
So, I tend to agree with Grega. I see.
Yeah, I wouldn't be long these things right here.
Yes. I see evidence. I see strong evidence that we might be very close to a turn. That doesn't mean that it's going to happen, but I see evidence, and I see more than one or two evidence. So would I be long the treasuries here? Would I be short the dollar here? No, I wouldn't. Would I be already long the dollar and short the treasuries? I could be, because the risk reward is there, but I'd rather get more confirmation. That's why also Blake, started the week by saying, because I think that, perhaps through a little bit of different lenses, but he's seeing the same thing. It's like, okay, yes, we might have a turn here, but why don't we spend a little bit more time monitoring the markets and at least doing what we're doing, having more confidence in the move, you know what I mean?
Or take a vacation, as he suggested.
Yeah, that's also viable. Now let's have a look at the metals, because friends are asking, and yes, of course we're going to have a look at them. Okay, let's start by the palladium. Okay. Yeah. I opened it at the wrong place.
I'll be back in a couple, Steve.
Okay, palladium. We got a rejection from a retest of the previous high up there. We're back in the channel. This is a combination of bearish candlesticks for the moment, those last three. So it's like another evening star formation. Up here at the highs, we got a Marubozu black candle. I mean, this thing's like it seems like it's turning again. But I would like to see what's going to happen when it tests this wedge resistance once again. So I'm going to be patient with it. If I see a move lower in 3 waves, I'm obviously not going to be short. If I see something stronger, I might get involved again. Now, silver. Situation remains as it was last week. Silver remains weak at the moment. We've penetrated below this zone. We've penetrated below the 61.8. This huge rejection was, obviously very emphatic. Somebody might view this like a 3-wave, like A, B, C. So let's say that this is the case. What would we expect? Let's use the magnet as well. If that's the case, then we would expect a move close to the 78.6, because we have equality there. So perhaps a move to 1635, 1640. If we see a rejection from there, an emphatic rejection, then perhaps we are entering a situation that we might think that we have some kind of a correction that is, a triangular correction, a flat correction, or whatever. So, then we might get a rebound. I might get involved with that because, if we keep going straight forward there, we might see a nice rebound, and, there might be some, half a dollar to be made on the upside, etc. But currently, do I see a sign that will get me bullish here with putting my stop loss somewhere? No, I don't see that. And same applies to gold. I've mentioned plenty of times the importance of 1245 as a level. Then we have the 200 DMA at 1238, and then we have this ascending. So the bullish scenario, let me explain what the bullish scenario is for gold now. The bullish scenario is if this proves to be a flat top triangle, which means that this is the top of the triangle and this is the support of the triangle. So under this scenario, any rebound above 1230, which is also where we are supposed to meet roughly the ascending support of the triangle and the 78.6. So any rebound from there sustains a viable bull scenario for gold. So any rebound can be viewed from a bullish set of eyes, although you would need to ignore the double top at 1295 and the false breakout of this huge descending trend line. So, I'm kind of torn at the moment. I wouldn't be long or short where we are for sure, although there is a chance that the 61.8 at 1245 holds. It has held before. But I don't see such a scenario for the time being as a prevalent scenario. So I'm monitoring. If I see some rejection from the triangle bottom or whatever, I will have the risk reward to say, sure, why not? Let's say this is a 40, 50%, 30, 40, 50% probability trade. But on the other hand, my reward to risk might be 3 times, 4 times. So if I'm risking 1 to gain 3 and my chances are 40%, in my opinion, for example, yes, I'm going to do it. But where we currently stand, no, I'm just monitoring, nothing else. If I see something that will, get me interested, I'm going to tell you straight ahead. And, I might even post a pip if that's during the day. So, ForexAnalytix members will receive that. But I see nothing currently as we speak and as I see the price action here. So I think that takes us over all the metals. I'm a little confused on bonds after Draghi. Just think they're going to force it in a tight range. Come autumn, year end, market is going to force ECB hand. I think we start rolling over from 165 to 167 area, but slow motion, Lucas says. So let's have a look at the bonds. Okay, bonds. For the time being, the only thing I see here is a broad formation. We got a rejection after a false breakup here, but is this thing bearish at the moment? No, it's not. It's not. I mean, we're holding again, and I agree with you, Luca. I mean, the currently bonds. First of all, if treasuries, as we said, that we see a likely scenario for that. If treasuries roll over, bonds are highly correlated with them. They should be strongly affected by that, and that should help.
They look much healthier on a relative strength basis. The 10-year is rallying back after a big break and correcting.
Mm-hmm.
That's pretty close to all-time highs up there in July through September, isn't it?
Correct.
So,
but on the other hand, let me tell you something.
Okay, so
let me tell you something.
Go ahead.
Let's see the moves that bonds have produced since topping out in September. Okay, is this an impulsive move?
Yeah.
I don't think so.
Know.
Very overlapping. Is this an impulsive move?
Yeah, no. That looks impulsive.
Yeah, it was actually this candle and this candle are rollovers. But look at it. I mean, again, A, B, C. I mean,
yeah.
Obviously, this...
They look like they could make new highs.
Yes, I mean, it is a possibility. We're seeing here moves in opposite directions, but none of them looks really impulsive because they get overlapped over and over again. You see some strong move and you say, okay, this is it. It's rolling over. And then, boom, a reversal and will retrace 78.6, 88.6. This is more of some kind of a triangle, right? So it needs more patience. Yeah. I mean, you can play a tactic that you're short near the highs and long near the lows. So, according to this makes sense to make you want to be short at the moment. But on the other hand, the bonds don't seem...
Yeah, maybe for a move to 62, 63, but that's all I'd be looking for.
The first support we have here actually is at 64, the first support. Then the second support I see, which also coincides with the 200 EMA, it's at 162.70. So that's the second level I would be looking at.
Okay.
But after getting this very nice rejection here, we seem to be consolidating. So perhaps one more leg lower to at least test 164, yes, might be in the cards. But, price action very mixed at the moment. And Luca is right, because fundamentally speaking, we have two opposing forces. One of them says the following, that one way or another, first of all, ECB has hinted what? A, they have clearly said that they're not looking to lower rates anymore. At the previous press conference, I think Draghi was pretty adamant about that. Secondly, they are hinting that, the QE is likely nearing, its end at some point, because growth has been picking up. Inflation has done a lot better in this period. Yes, it's not exactly where they would want it to be. And we all very well know that the key player in the Eurozone is Germany. And we all know how hawkish Weidmann and the Bundesbank, etc., are about monetary policy. So
yeah, they don't want any more wheelbarrow situations.
exactly. So unless we see the global economy rolling over, which will immediately hint of a strong need for reinstating stimulus, all over the globe, etc., I think that the risks are that the Bund is eventually going to move lower and, not make a new high. But on the other hand, price action, is not telling us that. It's telling us that, either thing can happen, and actually perhaps we had a correction and the correction is over, right? Maybe.
Almost, yeah.
Yeah.
You want a CNBC analyst description of the Bunds right here?
Tell me.
Okay. If the Bunds break down to 64, they could move lower unless it reverses and heads back up. But if it heads back up and then is rejected, it could move lower unless it rallies again.
Come on.
Huh?
You're making that up.
No, that's how.
That's more or less what they would say. Yeah, but but in this case, something. In this case, they would be right to give such a such a vague guidance.
Anyway, they have there's nothing actionable in what they say.
Exactly. So
okay. So anyway.
Exactly. So what the point is that when you see such a mixed technical picture, the only thing you can do is what you described, jokingly, is give some key levels and say, if we break above there, I'm convinced that then we're going to see another leg higher. But if we break below there, then, it's a totally different structure. So currently, I would say that from a macro perspective, I would be more of the opinion that the next big move is going to be lower, but there are risks to this assessment. That's what I'm saying. So I'm not involved with the Bunds at the moment, not at all.
You're ready for CNBC, buddy.
Yes, absolutely.
Right.
Who did you say we have today, Dale?
My friend Howard Friend. And Howard is in the house, and we'll start in about 7 minutes. But I interviewed Howard on FX Street. And, besides being a great trader, this guy is a great musician. I mean, he's a guitarist and a singer. He's got a great band. And actually, Howard wanted to come on about, 6-7 weeks ago because he had told me he believed the dollar had peaked for the year. And he was constructed the euro well before a lot of the advance. So then he said, when I gave him a date, well, maybe we'll be near where a correction might happen. So it's going to be great to get Howard's view on the dollar and the euro in about 7 minutes. I really advise people to stick around for it, or if you don't want to, of course, all of our sessions and interviews are on our YouTube channel. But looking forward to talking to my trading warrior friend.
Very nice. So let me guess. You're going to make a duet and sing online as well for us, right?
I don't think he would let me in this band. So anyway, his band's in a different league than. No.
I mean you're going to sing online.
I'm allowed to sing at karaoke, but they let everyone do it because you actually pay to be in a bar to be able to sing. I guarantee you his band, they get paid to play. I pay to sing. So anyway, there's a big difference. But looking forward to that. In fact, Steve, I'm going to take a quick break to get ready for Howard. And we'll start that interview in about.
Okay, that's not a problem because I have a couple more questions for
5 minutes.
For tickers. Okay, so I'm going to cover a couple more tickers. One of them is USD yen. Friends are asking. I had given my opinion on this. Actually, I remember we were on the webinar when we were actually testing this wedge bottom, and I said, because that was pre-Fed decision, I said that, listen, it currently looks bearish, but if we get a dollar, a bullish move from the dollar after the Fed, and we break above the wedge, that's going to be sign number 1 for me. Then I said, if we break out of this channel and hold it, the blue channel, that's going to be sign number 2 for me. But I will be interested to get involved if I also see a close above 112. So I'm just repeating exactly what I said a few hours before the Fed, because I have changed nothing in the way I was viewing it. So I'm seeing reversal signs here as well, and this is one extra sign when I was saying that I'm seeing several signs that the dollar and of course since you know they're I mean extremely correlated, the treasuries as well reversing. USD yen is one of the signs I have. So this wedge for me was something important. The channel is something important. We look like today we're going to close above it. Of course it's early, but we're going to see. And then it's 112. And if we also close above 112, I believe that the chances are quite high for a move higher in the USD yen. So, you know, my gut tells me that this thing is going to move higher from here. But, you know, I have one more level of confirmation I want to see. So that covers the USD yen question as well. Let's see what else we have. Nasdaq, yes. Nasdaq we already said, but I think we interrupted it a little bit. Nasdaq is rebounding from the channel lows. You know, I'm taking seriously this into consideration because it might simply mean a resumption of the trend higher. Why not? You never know. I mean, this is a crazy market. I've already covered half of my shorts. I made a good profit here, and I don't know when I'm going to cover the other half. I want to see how we close today, but you know, I might take profit on the other half as well. I'm going to see. I'm going to see if it gives me some kind of a picture that tomorrow we move lower again, and perhaps this is just an elaborate kind of correction or a triangle. I'm going to hold the other half. Otherwise, I'm going to book profit on that as well. I mean, I was patient enough with the Nasdaq. I lost all my profit here, left at break even, etc. So I don't want to lose this profit as well. So on the other hand, S&P was, you know, very clear that this was not a bearish pattern. I mean, that doesn't mean that it couldn't turn lower, but this kind of a pattern, I mean, it's a pattern that you usually expect to break higher, and for the time being, that's what it looks like it's going to do now. Dow Jones, on the other hand, is just outright bullish. I mean, it had been left behind. The Dow Jones was lagging for a long period of time, the S&P and mostly the Nasdaq, but it seems to have caught some of the bid from the rotation, from the short-term rotation out of the tech stocks. So, you know,
that's actually kind of bearish for the Dow to begin to lead, because they're the big cap safety type stocks, high quality.
You're absolutely right.
And I was taught this.
Yes.
I was taught this. I'm not saying that the Dow is done yet, okay? I'm just saying that there's an old expression that when the troops begin to retreat,
the generals get slaughtered.
The generals get slaughtered, and I call the troops NASDAQ or the S&P.
Yes. By the way, let me show you something else that's very interesting in the Dow Jones. Have you seen this channel? It's a perfect channel, right?
Yeah, it is.
Besides this false break lower, but even after we broke back above the channel, we started respecting it again. And look at this.
Yeah.
Here again. So,
yeah.
Question, why would you be long the Dow at the test of this channel again? Look at it and tell me. I wouldn't.
Yeah.
So what I'm trying to say, I even have a count.
Look at the RSI. Look at the RSI too.
Yeah. And I even have an Elliott wave count here, which shows that probably we are currently on a wave 5. So why not see something like this?
Okay, I'll be back.
Why not see something like this? Exactly on top of the channel. So, you know, it looks bullish at the moment, but I think my next short in indexes, because that's where I see the cleanest setup at the moment, is going to be in the Dow. So I expect if we move a little bit higher, that I'm going to soon be short the Dow Jones.
Okay, I'm going to make Howard the presenter now.
Perfect. Okay. Thank you, everyone. I'm going to see you tomorrow.
Everyone, thank you so much, Steve. As always, a great review of multiple instruments. You know what? You didn't know it before we started at FACE, that you're a great co-anchor and facilitator in a webinar format. And I didn't know before we started FACE what a great technician and trader you were. So you and I both learned something.
Thank you for your kind words.
And Howard, thank you so much for joining us today. I'm looking forward to hearing your voice and seeing your charts. You're now the presenter.
Can you hear me? Hi there.
Hi, how are you? How you doing, Howard?
Dale, very good, mate. How are you?
All right. So you heard my intro of you earlier. I saw you were in the room.
Yes, I did, and yeah, you can join my band anytime.
Thank you. Oh, at least how about being a roadie, buddy? That would be enough fun for me, and keeping all the women away from you, being your bodyguard.
That is an issue sometimes.
So, you know, it's telling the community, Howard, that you I believe sent me a message on LinkedIn that you wanted to talk about the euro well before, and the dollar peaking for the year. Well before this recent decline in the dollar ensued and the recent rally in the euro ensued. And then you said, well, you know, when I gave you this date, June 19th, you said, well, maybe by then we'll be in some type of corrective pattern for there to be another entry. So I'm going to hand it over to you. To me, it looks like you're showing the dollar as C was being corrective, and you're looking for a pretty good breakdown to the low 80s. For the rest of 17, correct? Am I reading your charts correctly?
Absolutely, yeah. So for me, the big picture for this thing is, you know, sort of multi-decade, multi-year. Not everybody likes to look at these really long-term trends, but for me, this is the big picture for the dollar. What I think we've been doing since 04, 05 has just been a sideways correction. We had pretty much an impulsive move down from, I think, 2001 or 2001 to the low, and we've been effectively going sideways in a range for that entire period.
I've also noticed, Howard, that each rally has been weaker. Like the rally you show from 95 to 01, 02 was a much stronger rally. I think there was even a stronger rally prior to the all-time high that was even stronger than that. So each successive rally or correction, as you have it labeled, is less and less dynamic.
Yeah, exactly. I mean, for me, the two patterns are, you know, from time to time I sort of get my Elliott head on and I see things, and this is something that really stands out, where you have the impulsive move down, which looking at the 1980s to 90s movement, you had the post-Plaza Accord move. I think that based out in like 1988. You had a strong rally in the A leg, and then from that point onwards topped out and the trend continued. And we had all these overlaps. You know, the market was trending lower high, lower high, lower low, but you had a lot of overlaps, which you know, in kind of typical technical terms, we're not big fans of that kind of thing in terms of health for the move. You know, usually B wave or kind of ending C or wave 5. So in that first sequence, we had the choppy decline into the $95 index low. Now that for me is a very similar kind of begrudging almost move, a bit like the you know, 2006 to 2011 decline in the dollar. So we saw new all-time lows for the dollar, but the move was really not in a big hurry to get there.
Okay. What would change your mind? What kind of price action would negate this count?
I want to see it really on dollar index wise. I think it's got to really get back above 101, 102.
Okay.
But you know, you can have these kind of corrective bounces as well, because if you look at the previous one, I think we're basically in that sequence there. Can you see that on the screen?
Yeah, yeah. So it rallied and put in almost equal the high, but so that would you know, we could get a rally back to.
Yep.
If 104 was the high here, we could get a rally back to 101, 102. Turn the market real bullish, the dollar again, looking for new highs, and then fail.
That could happen. That could happen. But
Okay.
I think we're kind of a bit more in the sort of the tipping over phase, because it has started to move quite a lot recently. You know, good news is now good news, and bad news is kind of being ignored. So you know, it's nice to see some of that. So yeah, long term, you know, massive bear. I'd like to tie this in a little bit with some of the politics that's out there, because I mentioned before that I did an article at the back end of April as well, just looking at the Republican and Democratic tenures, and going back to Nixon, it appears that for whatever reason Republican administrations like to see a devaluation in the dollar of around 14-15%. Whether it's by accident or by design, it seems to happen. It has happened. Whereas the flip side, Democratic administrations have seen an average rise of 15%. So don't know why it happens, but it just has. You know,
Okay. So what's your preferred short against the dollar? Is it euro? Is it cable? Euro pound has been performing very well up till recently, which implies the euro continued outperformance of the euro over cable. Besides the dollar index. Oh, okay. So here we go.
Yeah. Well, that's the thing with sterling. I mean, the jury's out a little bit. With me, I think the jury's out a little bit on the yen and on the pound against the dollar. So I'm not in a massive hurry to attack those ones, because I think there could possibly be one more final low in this thing just to complete that sequence down. You know, I think when I last came on, I think we were talking about seeing the sea leg when we were here, and I think
How long ago was that, Howard? The last time we talked?
That was May 2014.
Oh wow, that's a long time.
I know it goes by, doesn't it?
Yeah, it sure does. Yeah.
But for me, that was always, you know, I was ready for this kind of big move up in the dollar, big move down in the non-dollar currencies. I think the euro has made its ultimate low, whereas the pound maybe not. I need to see how it goes from here. But I think if we can get back above this 135, then that will, you know, that will say that we've definitely seen the bottom. So I think the jury's out a little bit on that one for the time being.
Okay.
So yeah, just flipping back to dollar index again. So yeah, so the you know, the political side of things I think is definitely favourable to a lower dollar for whatever reason.
Well, our president said he would prefer one a couple of months ago.
Exactly, I think he's going to be working towards it. There might be some jawboning. Who knows what goes on behind the scenes in terms of twisting arms and things, but I think he'll get his way. Whether he does it, whether the market is responding to him favourably, or whether you know, I think one way or the other. And there could even be some positive euro news in here, because we've had a lot of bad news thrown at the euro over the last few years as well. So we could actually start to see.
And this is a euro chart we're looking at?
Yeah, this is kind of euro and also pre-1990.
Deutschmark, using the Deutschmark as a proxy.
Exactly. Okay. So the December, January dollar top, euro low, based right on that trend line. So that could be something for a long-term you know, bullish argument as well. Obviously, it's gone up a little bit since.
Very nice telescopic view there. So 120 looks like it would be a natural spot.
Easy, yeah, I think so. I think more like 130. Personally, I think, you know, whether we see it, you know, we could eventually see a new high in this thing. And the interesting thing is, you know, people ask the question, what could cause it? I don't know. what caused the last two rallies in the currencies against the dollar?
I don't know. What did? Yeah. Confidence crisis. I know going into the Plaza Accord, The bond market was in trouble. That was Jim Baker. It caused the 87 crash. I'm not sure about the other historical fundamentals behind the dollar sell-offs. Like well, okay, I could say from the financial crisis low, it was aggressive easing by the Fed. You know, everything, when the dollar went down, everything went up. It was risk on with the dollar going up from March '09, or it looks like you have it from all the way '03. Maybe that was the other bubble. And it mainly Fed action that we had nominal gains, like the dollar dropped 30%, the market rallied 30%, but that was more like a 30% gain in nominal terms, not in real terms, because the dollar dropped that much.
Yeah, it'll be interesting. I mean, for whatever reason, this thing seems to want to be trending higher, going back to the when they let the thing float. So.
Okay, so I guess the parity bears are going to have to wait another, you know, 5-10 years
I think so.
for that to happen. Okay,
I think so.
I wonder what's going to make them give up. It's interesting, you know, one of the biggest Euro bears that I know of is Raoul Paul.
Yeah.
And I'm going to be interviewing him in July. I mean, he was talking 70-cent euro. So, what, you know, it's probably going to take some time to convert some of these guys, probably at least closing back over 120, 130, something like that, don't you think?
Yeah, no, I think that's invariably how the forecasters work, isn't it? They kind of there's a lot of you need to see the market go higher to change to a bullish forecast, and all the rest of it. You see it with the Goldman Sachs and all the other guys. They chase the market, but that's the way it works in this world, isn't it?
So then the euro would be your preferred short, your preferred long. What would your, besides the dollar, what would be your preferred short during the dollar decline?
I like the commodity ones as well. I like Aussie and CAD.
Okay.
Let me just see. I think CAD looks pretty good. I think we've completed a second wave bounce. I think that is ready to crack.
Okay, so you're looking 115-ish?
Yeah, I think that.
Do you think you know what I think might surprise people, because you know crude, everyone's been following the crude Canada correlation, Howard, and I think what's going to trip people up is the crude still looks negative to me. I would think that if we were going to go, most people would say if we were going to go to 115 in Canada, crude should base here and rally to $60, but I think it might trip them up. I think crude's going to 40, maybe sub 40, and Canada could still go down.
Yeah.
Could a possibility be for dollar weakness? You know, part of the reason it's been strong has been, of course, it's a reserve currency, it's a petro currency, and if there's a bear market in crude, there's not as much demand for the dollars, or could it be the fact that our adversaries are trying to create financial systems to weaken the reserve status of the U.S. dollar? Do you think we'll lose reserve status if you're right and we see a 160 euro?
Yeah, that could be one of the stories. That could be one of the stories, that's the shifting away from the importance of the dollar. I mean, we've seen a lot of moves in China as well, aren't we? In terms of becoming, stepping onto the world stage and the one belt and everything.
And Russia has created a new type of comparable to the SWIFT system. So they're developing other ways of exchanging currencies, and I would assume that a lot of people at every euro high, you end up hearing rock stars wanting to get paid in euros instead of the dollar. That happened at the last time. Or countries wanting to get paid for their oil, like Saddam, in euros or gold instead of the dollar, which I think was one of the reasons, not WMD, that we went in there for hegemony. So this could end up being kind of a mortal blow for the U.S. having enjoyed this advantage of being the reserve currency.
Yeah, it it just seems to be the way the wind is blowing there with the current administration, I think. I know there's been, on the campaign trail, there was a lot of talk of isolationism and America first. Since then, there's been a few forays into foreign lands and things like that. But I think his instinct is to be more isolationist and to protect America.
So putting America first is going to make us last.
I would not say that for sure, but I don't think it's a good idea. That's my own opinion.
Okay, buddy. All right. So you like Aussie? What were your Aussie targets to the upside? I know some people are talking 82. Are you looking higher than that?
Yeah, Aussie looks like 90, I think, to me. Let me just find the. Yeah, I think Aussie, we're again in a sort of a third wave position. We're just based out after making the low back end of last year. Consolidation, which I think is bullish, and then once we get above these highs here, then we're away. It looks like a 90 plus handle to me.
Could I extrapolate these views into a stronger precious metal environment?
Yeah, although gold, I'm glad you come on to gold, because I wanted to talk a little bit about this gold and euro dollar correlation. Gold is stuck in this constricted range here. I think it will eventually break to the upside, although I need a bit more confirmation. We've got this trend line that comes in from the 2012 high. This is on monthly closes, by the way. But the interesting thing, just going back to euro and gold, and you're just looking at the two things together, is that they were going up together for quite some time till the financial crisis, 2008. We saw new highs in gold, lower highs in euro dollar. So we had this kind of bubble in gold, and since then the gold kind of came all the way back to the pre-bubble levels, and we're just basing above the pre-bubble levels here around, what is it, 1050, 10.
Yeah.
So it's back down to normal level. If you thought it was overbought back here, it's not overbought here, in my opinion.
Okay.
So 1365, it seems an eternity away at the moment, but that would be a big upside trigger for me on gold. And that would tell me that we're doing new highs. Yeah.
Where would you be probing it? I know there's also like that little red trend line you're showing would come in at 1240. And is there a possibility that really the new gold is euro and not gold, and we get one more washout under 1050 while the euro's, maybe pulling back, or seems like the relative strength is in the euro now over the gold.
I agree. I totally agree. It could be one of these things where it might break this little trend line, then just come back and stay in a range.
Okay.
So yeah, I wouldn't, as I said before, I wouldn't be massively confident in buying gold here for the move higher. I'd rather see a bit more time and maybe get the break above 1365. But I think the euro is the one really.
Do you have a view on U.S. dollar yen, which is a risk on, risk off currency, has a lot to do with yields in the U.S. and
yeah, I'm a little bit on the sidelines on this thing. I think it's going to go down with the dollar eventually, but it may be stuck in this little range before we can do it. I think it's basically maybe 105 to 120 or something before it breaks again. I think that was the first crack in the trend from here to the recent swing low there, 98.90. But I think we're effectively stuck in a bit of a range until it finally goes. It may need the stock market to something to sort of crack the stock market before dollar yen can go.
Yeah, I was kind of thinking that your 1 or A and equality from 2 or B would take it down to 90.
Yeah, but it may take time before it actually decides it wants to do it. It's not for me. It's not as strong a view as say Euro, Aussie, and CAD against the US.
Okay. Were there any other instruments you wanted to share today?
I think that's pretty much it.
All right.
Yeah.
And why don't you show your website, Howard, and how people can get a hold of you, and what's your business model? Are you mentoring? Are you sending out alerts? What are you doing? What are you doing for, say, the retail public?
Yeah, so a lot of different things. Things like training, that kind of thing, one-on-one. I do signals, but you know, that's a bit more select. I need to talk to people directly on that one because I'm not aiming for the individual person at the moment on that thing.
Okay.
So yeah. On top of that, I manage money for a Swiss company, which I'm one of the founders and partners, Easy New Alpha Partners. So yeah, just a few different things, you know, on you know, trading, analysis, and mentoring.
Okay. Are they a broker or a money manager, that Swiss company?
A money manager, asset manager. We're Swiss licensed money managers.
I see. Okay, Howard. Well, you know, thank you. You want to growl a little bit like a bear? Because you are definitely, you want to play one of your band's tunes to take us out?
Oh no, I'd be very embarrassed about that.
I mean, that video, I forgot the song you sent me, but that was a great set that you guys were playing. I want to thank you so much for being here, Howard. It was, let's not let 3 years go by again. It's been quite a 3-year period for me. Absolutely. And I'm so glad that you reached out, and promise you that it won't be 3 years next time for us to get updated on what you're seeing, and really some great views and very nice. I love telescopic views, and you were like Galileo today, Howard. So thank you so much, my trading warrior brother. Good hunting during this dollar bear market, and keep in touch with me, and we'll do this again.
Looking forward to it, Dale. Thanks, mate. All the best to you.
Thank you very much. And guys, you can follow Howard Trend at break and retrace _ what's the number, Howard?
3.
3? Break and retrace.
Yeah, at break _ retrace 3.
All right.
With the capital B, capital R.
All right, Howard Friend's a must follow. Thank you very much, Howard.
Great, guys. Good luck to everybody out there.
Thank you very much, Howard. Take it easy.
Cheers.
All right,
bye-bye.
Bye. Thank you, Face. As you can see, Jess, he liked it. He's talking 90 in Aussie. Another great interview. And I want to thank Steve Volge for his review of the markets, and Stelios talking about cable, and Blake coming in here and telling people to take a vacation, but be alert going into. So if we do get this break in euro down towards 109, 109.40, it's going to be a gift according to the scenario that Howard painted. Remember, don't just count your pips, count your blessings, everybody, and see you tomorrow for Turnaround Tuesday. Adios.